So when I execute some of these trades that I talk about and I show you with these strategies, the trade copier will automatically duplicate that trade for you in your MetaTrader platform. You don't have to do anything. You don't even have to be there. I mean, you could be asleep, you could be at work, you could be in your car. And the moment I open the trade on my platform, it will open the trade for you. And then as soon as I close the trade, it will close the trade for you. So when I manage these trades, just like we're going to talk about today in the strategies that I'm going to present to you, the trade copier does the exact same thing for you. So you get the same performance, the same results. And then I'll show you how it installs at the very end of this presentation. So let's go ahead and start off with the Japanese yen up here at the top right corner. Generally, when I'm looking at my charts, if I anticipate or expect some kind of breakout move, one of the things I'm going to do is pay attention to the 1 hour time frame. And when I pay attention to the 1 hour time frame and I start to do some work on the 1 hour time frame, I mean, every day it's going to be different. I never really know where price is going to be. Of course, it's always going to be moving around. And there are times when I don't see anything. Nothing makes any sense. And at that point, when I can determine that nothing makes sense to me, it might make sense to other people, but if it doesn't make any sense to me, what I'm going to do is basically just leave it alone. At this point, the 1 hour time frame, always trying to assess or identify where there is a range of consolidation if I want to trade the continuation breakout trade. This is not trading reversals. When I trade reversals, like off of support and resistance from the previous day, things like that, short-term trades, intraday trading, trading inside a consolidation, I'm going to use and execute the HL30, which we're going to talk about that in just a few minutes with the euro dollar. So before non-farm payroll on Friday, I had a trade here and I had an opportunity to sell this pair. And I wanted to talk about where and how this one actually developed. So I'm going to show you a level of support that I had. Here was that level of support right here. And it's just a matter of waiting for it sometimes. So prior to that, here is a level of resistance. Obviously, that was the high for that particular day. There's Friday's trading range. The market is closed now. And here's Thursday. Here's the high for Thursday. And you'll notice that there's a trading range right here. There's a high and one, for the most part, one clean price swing low here. But at this point, this was a short-term support and resistance level. This was a good range that solidifies that consolidation range so that when I actually get a closed, completed continuation signal candle like this one here, when that actually occurs, if it's remained inside of this consolidation range and it's a significant range, I'm less likely to see the possibility of price creating that head fake scenario where price will come back up inside of consolidation, and then if I was to try to sell this, I could potentially experience a failed trade. So it's just one way of minimizing that possibility. Now, what put me in this trade before non-farm payroll was this sell signal right here. So earlier I made a video covering this particular trade and I showed the Bollinger Band separation on the MetaTrader platform. So there was separation here, and then of course it's just a matter of waiting for the 3-pip entry, which I got on the next candle. Now, normally these targets for the continuation breakout trade, if I was going to execute it on the dollar yen, I'd be looking for a 55-pip target. And you'll notice that it did hit the 55-pip target, but then came right back up into the previous range of consolidation and tested that resistance point. Now, this was non-farm payroll, that green candle there. And in a situation like this, and this is the reason why we're really talking about this, is that normally, if it was not non-farm payroll that I was trying to trade into, where I got into the trade and then I was waiting for the release of that data, if it was not non-farm payroll, then I probably would have held and everything would have been okay. It would have hit the 55-pip target. I would have taken my profits and I wouldn't have had to worry about the spike. The reason that I closed the trade early before it hit the target is that I never really know which direction the spike or the reaction is going to go in. It could spike 50, 60, 70 pips up or 50, 60, 70 pips down. And so knowing that that's a possibility, I'm definitely going to lock in profits if I'm already profitable in the trade. Now, when we trade the dollar yen, I'm also trading and watching Japanese yen futures. Now, this is my Japanese yen futures chart. This is just futures. This is not a currency pair where it's paired with another currency. And for the most part, what I'm doing is I'm looking for the same behavior and the same signals, like the continuation breakout trade, the HL30, things like that. I'm looking for these signals here to give me confirmation on the Japanese yen futures so I can trade anything on the dollar yen. That was the continuation breakout trade. So the continuation breakout trade is going to put us in the path of a big overall trending move. When it breaks out, we expect a trend in the same direction of the breakout, and we can normally earn anywhere from 55 pips to the final target when we trade the continuation breakout trade on the euro dollar, the dollar yen, and the pound dollar. And when I trade the continuation breakout trade on the euro yen, we earn up to anywhere from 80 to 150 pips. And then when I trade the continuation breakout trade on the pound yen, we earn up to 250 pips. It really depends on how close or how far away support and resistance is. And we have to, again, manage the trades. So there are some variables that you need to be aware of when you're trading those the continuation breakout trade on the other currency pairs in the larger time frames. Now we're going to take a quick look at the euro dollar. This was the HL30 that I executed on Friday. It might actually be easier if I go to my MetaTrader platform. So we're going to go to the MetaTrader platform, and I'm going to show you how I set this up. Basically, when the rollover period occurs, 5 p.m. New York time, I pretty much wait and then identify the previous day's high and low. And in this situation, I had a high back up here. That was the high right after the previous day. This was Thursday's trading range. And this is Thursday's low. That's my trading range for Thursday. And you can see where the euro closed right at that rollover period, pretty much in the middle of this overall trading range. Most of the times it'll do that. However, there are times when it will close at or around areas of resistance or support. It really depends on the trading day. Every day is different. But for the most part, what I have to do is I have to wait until price reaches either resistance or support within a 10 pip range. So if the high here is 47, then I need price to come up to at least 37 to qualify for that 10 pip range. And then if the low here is 53, then price needs to come down to at least 63. So leading into, now again, this is not a breakout trade. There is no breakout. We can see that even just by identifying the previous day's high and low, it doesn't really break out of that range at all. So we're anticipating at this point, or I was anticipating at this point, anybody that would be executing this HL30 technique would be thinking to themselves, I do nothing for the most part until price reaches either support or resistance, because that's when we're going to get the biggest reaction. And I often say that many times inside of consolidation, I'll see reversal signal candles. I'll see an engulfing candle, a morning star, an evening star, whatever the case is. If it's right in the middle of a trading range like this, I'll see the pattern, and it might even confirm with some indicators. But you'll notice that sometimes if you were to trade it, they roll over and they come right back up and they stop you out. It just keeps zigzagging right inside of this range. So to me, I'd rather not trade that. I'd rather wait. I mean, I know it's going to have to go to either support or resistance, obviously. But because I really can't guess that, that would be more of a gambling trade. I'd rather wait for price to hit resistance or support within this range and then trade the reaction. That's how I prefer to trade it. So I'm doing nothing at this point until price approaches either support or resistance. Now, this candle here, just before non-farm payroll, it went up as high as, yeah, that high was 32 on this chart, but it has to come up to at least 37 to qualify for an HL30. So it did print the reversal, but I didn't trade it as the reversal. And I'm talking about a reversal to the downside. Here you've got that big engulfing candle. You know, it could be argued, is this an evening star, that kind of thing. It is in the middle of this range, so it's not at the most optimum levels. But it didn't approach resistance just yet. I mean, it wasn't good enough to qualify for that 10 pip range. So I didn't try selling it on that candle that closed there, the strong one. If I would have sold it, it's possible that price could have spiked back up and never paid me the 20 pips. So when we use the HL30, when I use the HL30 on the euro dollar, pound dollar, or dollar yen, it's always a 20 pip target, 20 pip stop, always. Now, with the close of that candle there, that's 87. Price obviously would have to go down to 67 on the very next candle. And if it didn't, then I would get stopped out. Here, that white candle only went as low as 72. So you can see that the reason that I didn't sell on this candle is that it was not a qualified HL30. It was a reversal candle, but it didn't go up high enough to reach that 10 pip range for me to expect that people would really start selling it off here. So on the spike after non-farm payroll, it did go down close enough to the previous day's low to qualify for that 10 pip range. Remember, the previous day's low was 53. It has to come down to at least 63 to qualify. That spike low right there went to 62. So it qualified. It went below 63. It qualified as an HL30. The only thing I needed to do, and what I was waiting for after non-farm payroll, was for the reversal signal candle. So that white candle, that little white candle right there, that's not a reversal signal candle. It needs to be engulfing, or it needs to print a morning star pattern, wherever that might end up being. And you'll notice that right afterwards we got some more economic data, and on that strong white candle right there, even though it covered such a great distance, that was the one that not only engulfed, but it created that morning star pattern. So that was my entry on the close of that candle. The close of that candle was 19. So I need to confirm that the CCI reading is higher on the close of that candle if I'm going to trade it up than it was when it printed that low on the CCI the previous day. And it was. You can see that here's the low just below the minus 100. And on the close of that candle that actually put me into the trade, that was above 100, the positive 100. So at this point, I just take a 20 pip target. So that candle goes as high as 44. So you can see that it not only cleared 39, but it went a little bit further. And the reason that I close and take profits like this, remember, we're only looking for a 20 pip target, a 20 pip stop. And you can see that I really wasn't worried about my stop. I really wasn't worried about the retracement. It could have. It certainly could have stayed inside a consolidation. It could have came back down before even reaching the the profit target. But I knew with all of the data, all of the reaction, the release of all the information, the way it was testing support and resistance, that this was most likely the trade that was going to work in my favor. So it really didn't even pull back all that much. I really didn't have to worry about a negative retracement on my trade. So really, with every trading strategy, every technique, there is an entry and there is an exit. It certainly is with my system, and it should be that way with everybody's system. You need to know where to take profits. You can't just get into a trade and just hope that a trend will just take you, like the wind, and you're just going to ride it for as long as you possibly can. That's great to dream about, but it doesn't work like that. You can literally hold too long and give back all the profits that you had. This was the HL30. This was just a perfect trade, even though it really didn't look that normal. Normally what we see is we see an HL30 that will bounce off of the previous day's support. It'll bounce around a little bit and then create a small engulfing candle, and we trade it way back down here all the way back up. Of course, taking profits at that first 20 pip target. That's how it normally works. But this was the same structure. The structure and the rules to the HL30 were all here. So that's really what I wanted to end with, was this particular trade, because I know it confused some people that are trying to learn how to execute this HL30. The advantage is that I can execute the HL30 for you. I can execute the continuation breakout trades, all of them. You don't have to be fearful about executing these trades using my MT4 trade copier. When you install it onto your MetaTrader platform, I execute the trades for you. So when I get into the trade, just like we did here, it will open the trade in your platform. When I close the trade at the appropriate profit targets, it will close the trade at the exact same time at the same levels. So let's go ahead and talk about the trade copier, and I'm going to show you how easy it is to install the trade copier. So the installation of the trade copier, the MT4 trade copier, is very, very easy. It's about 5 minutes or less. It comes with an installation wizard. So once you make your purchase and you sign up to use the trade copier, you're going to get an email, and in the email that I send you with the trade copier, there's a link, and it'll send you straight back to this members page. This is a password protected members area, and then all you have to do is, and I have many videos on installation, how to install it, how to set it up correctly with the leverage and the lot size that you might want to use according to the account balance that you have, all kinds of tips and tricks to walk you through getting the maximum use out of the trade copier so you can make as much money as possible. There's also a PDF manual, and here's where you're going to download the MT4 trade copier. Again, many videos. And once you download the MT4 trade copier, you just download it onto your desktop, and then you open it up. Obviously it's going to be a zip folder, so you're going to open up that zip folder, and then you're going to open up the trade copier. Here you see the PDF manual that comes with the trade copier. Lots of tips and tricks on how to use the trade copier so you can maximize your profits every single month using the trade copier. But this is the actual setup. So all you have to do is double click on the trade copier. It's going to open up a wizard, and this is the trade copier wizard. All you have to do is click on agree. Once you click on agree, it's going to identify all of the MT4 platforms that you have installed on the computer that you're using the trade copier with. So for example, if I wanted to install it on my FXCM MetaTrader account, all I'd have to do is click on it once to highlight it and click install. That's how fast it is. That took less than 2 seconds to install it. It's that quick. Once it's installed, all you have to do now is open up the MetaTrader platform. I'll show you how to do that. Now what I've done is I've brought the navigator panel, which is normally on the left hand side. You can see it by clicking on view up there at the top left. Click on view and then click on navigator. This is the navigator panel, and here you can see the MT4 trade copier. So normally what I like to do is I like to install the trade copier on my euro dollar chart. You only need to install the trade copier on one chart. Really easy to do. So all you have to do is just drag it over here to the far right into the blank space of the chart, and here are all of the settings. So you're going to receive a designated channel name from me. You're also going to get a designated username and password that you actually get to enter. And then scrolling down through this whole list of all of these options, here you actually get to set up the leverage, the lot size, the maximum stop loss levels. All of that information is in there on how you can customize. I also, again, have videos in the members area that tell you exactly how to use this. It's very easy. Technically, you really only need 3 settings. You need to enter in, of course, the channel, the username, and the password. Those are the first 3 settings. But really, all you need to do is set in the maximum stop loss and then set in your leverage or lot size, and you're good to go. It is that easy, and it works automatically. The trade copier will automatically duplicate all of the behavior that I execute on my trading platform. So that's really how the trade copier works. It's really that easy. And of course, you can always set up the trade copier on a demo account before you use it on your live account. That way you can get yourself familiar with the experience that you're going to be receiving from the trade copier, such as my performance and how the trade copier actually performs for you. But this is hands down one of the easiest ways to start making money as a trader.